Physical deliveries have been elevated since the government shutdowns in 2020. People are buying gold and silver in bulk amounts, not just the central banks. Big agencies are coming out and saying they expect very high inflation. These people know what's going on. They know what's coming.
Welcome, everyone. Welcome to the channel. Today, I have someone who has been here before. He is the owner of the YouTube channel, The Freedom Report. He's also a huge member of Citizens for Sound Money and part of their legislative process to get legislation in states that do not already have legislation in their state, including yours, maybe. I hope you will stay for the entire video because he has a lot of excellent information to give to all of you. So without further ado, I want to welcome my guest, Rob Kientz from the Freedom Report. Hey, Rob, how you doing?
I'm doing very well, man. Thank you for having me back.
Thank you for coming back. So,
Yeah, absolutely.
being the intelligent man that I've known you to be, I've seen you bring a lot of great information to the community, a lot of what you've done on Citizens for Sound Money. And, I was wondering what you are seeing in our community that you are finding interesting for the people, especially the ones who are not well versed, things that they should take home today as their educational message.
Well, yeah, it's my approach to this is a little bit different than maybe your average metals channel. And I'm not just metals. I renamed my channel from Gold Silver Pros to its new name, The Freedom Report, a couple of years ago because I love precious metals, and that's certainly probably 2/3 of my content. But I also do a lot of economic study, and I kind of go beyond just talking about metals all the time. Some channels you'll see is just metals this, metals that, which is nothing wrong with that. But I also noticed there's a gap in what people report on. So the big thing is how prices are determined. It's derivatives, not physical trade. I've been saying this for years, writing on it for years. Most people don't understand. So people, when they see what's happened this year to gold and silver, they panic and say it's the end. It's the end of the world. And where really the fundamentals haven't changed. The fundamentals in our economy have actually gotten worse. And so I don't think gold and silver are going anywhere. But there are reasons why this stuff happens. And so I dive down into all that. And it's, not everybody necessarily wants to know that, but I think we need enough people in the industry knowing it so that we're not panicking, and the other thing is most people invest in anything, whether it be stocks or real estate or gold or silver or whatever have you, through confirmation bias. They see it going up and then they want to jump in. Key example is a SpaceX IPO. Goldman Sachs says that IPO is only worth half of what they're proposing or what they think the IPO is going to go for. And they think that retail is going to kind of be the bag holder there. But retail is going to jump in because of all of the hype. It's being talked about. And whenever you see something talked about the way that IPO is, you can bet that the people issuing those shares are the ones going to be making the money, not the people buying them. And the same thing can go on in the gold and silver space. People like to buy when it goes up, not when it goes down. And that's detrimental. I look at the day before January 30th. Silver's at 121, gold's at 5,500. People are riding high saying this can never stop. On social media, you had all of these unnamed, what I call fake accounts, AI accounts pumping gold and silver. The next day on January 30th, we get a 31% move in silver in a single day. Not the biggest single day move, but the biggest move in dollars. And gold, eventually crashed down over $1,000. And both of them are even below that. I was looking at silver this morning, it's at 64 or something. So, we've had nearly a 50% correction in silver. And people think that means that people don't want gold and silver anymore. And nothing could be further from the truth, because if you look at deliveries on the big markets, they're up. In fact, on a video last night, when I was explaining this to people, deliveries of gold and silver as a percentage of the trade in COMEX, which is our industrial market here in the U.S., the second biggest in the world behind London's LBMA, and pretty close to LBMA. We have a lot of size. Okay, it's a huge market. Physical deliveries have been elevated since the government shutdowns in 2020, and they have not stopped. And they're higher than they have been the previous 20 some years. So people are buying gold and silver in bulk amounts, not just the central banks, but industry and large other individual players. The managed money space right now, which represent things like hedge funds and ETFs and stock funds and pension funds and those types of guys, are buying, they're very active in the gold market right now, buying, those futures, participating in that market, because the futures is a paper price to gold that they can stick in their little funds without having to actually own it. And so you can see that there's a lot of interest in gold and silver. There's also a lot of interest in the physical deliveries, but that's the industrial side of the equation. Those are the big players. the big money players. They're buying gold and silver hand over fist. And as the price falls, they're buying more. And in 2025, it was the biggest year of central bank records in history ever. And not only that, but we're up to 36,000 tons of gold held by the world's central banks. And that's only 2,000 tons short of the peak during the gold era, up until 1971, the gold standard era. So central banks actually own as much gold right now as they did when gold was backing the entire world financial system. And 2025 was the biggest buying year. And it wasn't just because price was going up. They're still buying a ton this year. Deliveries in June, I think were like, I want to say 29,000 gold contracts so far. And we're not done with the end of the month. So the big guys are buying because the reasons for owning it haven't changed. The pricing scheme has what has changed. There was a big washout, and it takes time for that to rebound. And when you're looking at the long term at any bull market, I don't care if it's stocks, real estate, gold, silver, whatever, there are peaks and valleys. Just because something goes down, even if it violently goes down, doesn't mean you're at the end of the bull market. And I don't see any reason when I look at the world to say that gold and silver prices need to come down. They need to go up. And particularly in June, a lot of times people want to go jump off bridges when gold and silver go down in June, but June is the absolute, over the last 25 years and really history. But my study last night on the last 25 years of the gold and silver market was June is the worst month. Only 40% of months are up and 60% of months are down in both gold and silver. But you have like almost record amounts of gold deliveries. And in May's only up about 55% of the time. 45% of the time it's down. This year it was down. So we had massive silver deliveries in May. The smart players on the market buy it when it's cheap. And that's what you're supposed to do. You're supposed to buy stock when it's cheap and sell when it's high. The same with real estate. And I'm not a gold silver trader. I'm a stacker. But let's say I was trading it, I would buy low and sell high. But retail doesn't do that. So retail is taking all their scrap to the jewelry stores and selling it because prices are high. Not understanding that the big money and interest in the world, including the world central banks who issue all the currency and have more economic data than anybody else. I mean, look at the Fed. All they do is produce economic data. They know what's going on. They're buying hand over fist. So the bull market's not going anywhere. Prices seasonably are going to come down in May and June. There's a little bit of an uptick in July. And then August is really where it gets good. And it's late August through February, sort of the bull market season every year for gold and silver, typically. And if you add in the inflation concerns with what's going on, oil, helium, sulfur, liquefied natural gas, all those things that go through the Middle East Strait of Hormuz, which is not operating fully, then experts have already come out and said, and these are people like the UN, the Congressional Budget Office, the Food Accountability Office, these sort of big agencies are coming out and saying they expect very high inflation, pretty much starting late summer for the rest of the year and probably into 2027 across everything. We've already had 3 straight months of over 1.1% inflation in the US, which annualizes 14%. So experts expect that we'll at least get in 2026 total a 10% price increase, but they think it actually will end higher than that. The monthly numbers will be higher. We started off with lower inflation this year, but it's gone up a lot. And you can see that reflected in the commodity index. Commodities are very expensive right now. The net effect of everything I just said was gold and silver are cheap now. It's a time to buy because it's not going to be in the fall. Seasonally, it's not. And if you look at what's going on in the economy, it's going to add fuel to the fire and the prices are going to go up. My channel will see more people watching videos because gold and silver price is going up because of confirmation bias, because people buy when it's going up. They don't buy when the big money guys buy. And what I'm trying to help people understand is that's when you want to buy. But you have to have faith. And it's really a measure overall of faith in the gold and silver markets. I think that people, because it's been a long time that gold and silver have actually been money in the US, people have forgotten and there's not as much faith in it. But I will tell people that whenever you go through hard economic times, gold is always what the world turns to. Always, every single time without fail. And last piece I'll give in this very long opening answer is when you look at Basel III, which is put out by the Bank for International Settlements, which is the one that puts all the policy out for all the world central banks, including the Fed here in the US. And Basel III has made gold a high quality liquid asset. It's put it equivalent to currencies and central bank stock or central bank, equity, if you will. So they're putting gold at the top level. Now, if the people that issue the currencies are putting gold at the top level, what does that tell you? They're not doing that because they think gold and silver is going to be cut in half anytime soon. And they're not doing it because they think the world's going to want less. They're doing it to capitalize their balance sheets because gold doesn't have counterparty risk like a lot of other things do, meaning gold is gold. And if you have an ounce, you own it. And there's no contract that can take that away from you. And there's no person that can, there's no claim on it. Whereas fiat currency, our dollars are just a claim on the good faith of the government, and they're backed by treasuries, which are actually debt. And the less people want US treasuries, the worse that dollar situation gets. So that's why the central banks make gold equivalent, because they know that when the currencies crash, gold's going to get that benefit, and they want that on their balance sheet so the central banks don't go and solve it. And it's because they've issued so much currency. All of them have issued so much currency that all these fiat currencies could crash. And they know it. That's why they own gold. And they own as much gold as they ever did during the height of the gold standard, because gold is going to be what the entire currency system is revalued at when the crash happens. That's why they've been buying it. And, people should follow what those guys are doing, because one, they have more economic data. Two, they issue the currency. These people know what's going on. They know what's coming. And so my channel is about educating people on that kind of stuff. It's really helping people understand the long-term value of the market, and understanding when prices go down. It's not always a bad thing. I personally think that the market is coiling for a big move up. There's no data point that I can give you that is counter to that says, no, this is going to be a drag on gold and silver. This is going to pull it down. I don't see anything economically or currency related that makes me doubt gold and silver going forward here. And if we have a period of a few months of weak prices, good. Then people that buy it get a better deal. There's nothing wrong with that.
I understand that. One of the things that you made mention of was about oil causing everything to go up, which maybe you understand this better than I do. We're pumping and making our own crude oil, which we're selling. So we don't have a deficit like other countries that need the Strait of Hormuz. But yet our petroleum-like products are going up despite us selling and despite us having what we need. So why does the Strait of Hormuz seem to be increasing our prices here in the United States?
Well, the U.S. is either the second or third largest oil producer in the world. I can't remember which it is, but it's a big one. And it produces about as much as the Middle East and Russia, at least Saudi Arabia and Russia. And we do have pretty good oil reserves. Now you can talk about how hard they are to get out of the ground. But at the end of the day, we have a lot of liquefied natural gas and we have oil. And so the U.S. has been somewhat insulated for a while, but here's the reason why it doesn't matter, even if we just consuming our own oil, how prices are going to have to go up, because it's a global market. You can't take that genie out the bottle. We fly and ship stuff all the time. And in fact, pricing is dependent on global trade, not just trade in the US or trade in wherever, Saudi Arabia, trade in South Africa. It doesn't matter. It's a world market. And when 20% of the world's oil production is suddenly shut off, that's going to force prices higher, because demand's not going to change. You just have 20% less supply. And basic economics says prices are going to have to go up. They have to go up. And because there's more demand than there is supply. And the other thing that's been that you haven't seen oil just explode, it's gone up a lot, but it hasn't exploded yet, is because after the 70s oil crisis, when we didn't have capacity for storage, the world was not in storage because oil was abundant and nobody saw that crisis coming. So nobody built storage. Well, now we have a strategic reserve. Every country has a strategic reserve, and there are hundreds upon hundreds of millions of barrels of oil across the world that get put into these various reserves. Well, we are about 90% through those reserves. It's that 90% of that which has kept oil prices in line. But what happens when we don't have any more reserves? Well, we're screwed. Prices are going to go up. When I looked at research, again, from all these reputable agencies I quoted before on oil, they're saying even if, and this is a month ago, they said this is after month 2. Now we're going, finishing month 3 and going into month 4. So at the end of month 2, they said, even if you reestablished supply lines right now, you're still going to have energy price inflation for the second half of the year, particularly the last 4 to 5 months. And the fact it's gone an extra month, they said if it goes an extra month, it'll go into 2027. So we know that prices will stay elevated in 2027, because you have to not only reestablish flow, you got to fix all the facilities in the Middle East that were bombed out that do processing. You're not going to get 100% flow right away. In fact, in the liquefied natural gas fields that were destroyed in Qatar, Qatar said we can't rebuild until the war stops. And when it stops, it's going to take 5 years. So it takes time to rebuild damaged infrastructure. It takes time to refill the reserves. And I can tell you right now, China in particular, and a lot of countries, as a result of this war and this oil shutdown, have come out publicly and said, we're building more infrastructure. So after the 70s oil shock, you had a bunch of infrastructure built that built some resiliency in the system. And now they're building more resiliency and more storage in the system. I mean, think about it like a plane. You know, when planes were first developed, they were very simple, and now they have backup systems upon backup systems upon backup systems. Well, why do planes have triple redundant electrical systems and fuel system and all that kind of stuff? Because of crashes. Through those types of events, the airline industry figured out we need to make these things bulletproof. And not only that, but they're really resistant to lightning. I was studying that. Airplanes are really resistant to lightning strikes. Most planes can take a full lightning strike and still operate and land. So that's what's happening in the oil industry is we're having another shock to the system, and people are saying, okay, all the reserves we thought were good enough were for the old world, but when, you have a geopolitical conflict and it shuts off 20% of it, we drain those world reserves in 2.5 to 3 months, maybe we need to build more. Or another way to look at it is you go through a depression, and then out of the depression, everybody was keeping 6 months of food in their pantry, and they did it for decades because you want to keep extra food if you think you're not going to be able to get it all of a sudden. So these crashes build resiliency. So that's coming. We'll build more storage and stuff. But in the meantime, it's going to take years and years to do that. In the meantime, we're living on higher oil prices until all that gets built out. And it's going to be hundreds of billions of dollars to build that out. And it's going to be a cost, which is going to, by the way, add cost to the system. If you're distributing oil in this big worldwide infrastructure and you're building resiliency into it, you're going to raise prices. You have to. So part of the price increase is going to stay. It's not going to go away because it has to pay for the resiliency that we're going to build in the system so that the next time this happens, it doesn't freak the world out and threaten to crash world economies. It hadn't done that yet. But when we get to high inflation this year around the world, we're going to start having conversations about, oh gosh, maybe that was not such a best idea, at least from an economic perspective. Not talking politically, but economically, that was really tough. Maybe, we need to do some things in case that ever happens again. And we're lucky we had the strategic oil reserves we had. If this has been the 70s and we shut down 20% of production, which is the biggest single period shutdown that I can find in recorded history, we would have had gas lines if it weren't for the reserves we built after that crisis. But those reserves are emptying. I don't know if we're going to have a gasoline crisis, but it wouldn't surprise me at some point we did. And, as they're fixing stuff and getting the flow back. And that's assuming the end of the war and the stupid thing hasn't ended yet. So, when is that going to happen? One last thing I wanted to put was ExxonMobil, Costco, Sam's Club all came out about a month ago and said, we're running out of oil for your oil engine changes and filters. So by the way, by about midsummer, we may not be able to produce enough oil for you. And people will say, well, you can make it up in synthetics. Sure, but you got to build infrastructure for that too. So you can't just make it up with synthetics. Anytime you cut out 20% of any market, you don't recover from that in a few months. You recover in years, and prices will stay elevated during that time while you're doing it because the costs of that resiliency has to come from somewhere, and it's going to come from the end product. It's going to come from oil, and oil is used in thousands of things, which is why you're going to see inflation not only in energy prices, you're going to see it across the board. You're going to see it in food. And we're not even talking the fertilizer shortages. The fertilizer shortages, U.S. farmers said that they expect 1/3 less yield this year. It's expected that the world may put out 1/3 less overall food because of that fertilizer shortage this year. So we have relative food security in the U.S., but not complete food security. And that may be another issue that we're dealing with over the next year is food price increases because of the fertilizer and the oil situation. Oil is a transportation. So the average product, not all, but average, if you average out all the products that show up in your supermarket, they travel 1,000 miles to get to you. That includes things like strawberries. And that includes things like breakfast cereal. Not all is locally sourced. What we've done is we have these specialized points at where people grow things in bulk and then they ship them. Well, what's powering that shipment? It's railways, which a lot of it's coal, but then it's also diesel fuel, which comes out of a barrel of oil. And so you may see shortages in certain products that you like to see because they're just too darn expensive to ship. I mean, those are the types that's the things we're going to be dealing with for the second half of the year and probably into the first quarter of 2027.
Totally agree with you. One of the things you said, I know we don't get much in the terms of fertilizer from the Strait of Hormuz, but seems like we don't make enough of our own food yet, so we still have to import. So there comes in that equation that you just mentioned.
We import a lot from places like Venezuela, Brazil, certain types of foods. A lot of food comes from Brazil, by the way. So yeah, we don't grow everything. We import a lot from Mexico as well.
So what's your take on the current inflation? We talked a little bit about this before we started the program. So for the viewers here, what's your take on inflation?
Inflation is going to continue to go up. I think we'll reach double digit for 2026, and that's being conservative. And I think inflation is going to continue to rise. If you look at the world, people have been de-dollarizing. They're dropping U.S. debt. Our central bank is buying more treasury debt now, which is they call direct asset purchases. Basically what it is we're printing money to cover our debt. But the funny thing is money and debt are part of the same system. Money is created through debt creation. So when you go to buy a mortgage, the bank doesn't actually have all that money. You wonder how a small bank can do a bunch of mortgages. Well, their savings deposits don't cover that. Their savings deposits, they go invest in other market instruments. The money created through a mortgage literally gets printed or electronically created at the point you sign the mortgage papers. And all the bank does is say, okay, Federal Reserve System, I've got this loan. I need this currency, send it over to the builder. And then the lender's on the hook for that. So they put you in a mortgage so that they can get it back and they make interest. So the bank makes interest off of mortgages in which they didn't have any skin in the game. And, that creates more currency creation. So debt creates currency and more debt creates more currency. And then if they're just going to print a bunch more currency to pay for the existing debt, then all they're doing is making the situation worse. It's like a snowball running downhill. It's stupid, but that's the way the system was designed. It's absolutely asinine. It has no basis in reality, but it's a system we have. So inflation and interest rates are only going to continue to rise. It doesn't mean they won't pull back at points, but I don't see a time in the next 3 to 4 years where interest rates and inflation isn't just chugging along and not plateauing. It's going to accelerate. It's going to keep going up. And the thing about that is over time, it's a compounding effect. It's what Einstein called the ninth wonder of the world, is when you compound interest, meaning let's say price of a loaf of bread is $1 today. Next year, it's $1.10. Well, if we have a 10% interest rate on top of that, the next year it's $1.21, not $1.20. Well, it's only 1 cent difference. But then it's like $1.33 because the interest rate is on the existing price. And so it compounds. And so over time, it looks like this, and then boom, you get this hockey stick. And we're at the point of prices from 1913 when the Fed was created and the dollar was created, where we're in that hockey stick part where things are going to accelerate and inflation is going to go up so fast that it's going to shock people. And that's what I see coming in the next few years. And that's going to put incredible pressure on the dollar. I think the dollar eventually will bust, at least as the world reserve currency. And the US is going to have to drag out their Bitcoin and gold holdings and revalue them to stay solvent. And I think that's why Trump created the Sovereign Wealth Fund, was for that exact purpose, because they know what's coming. And they've also said that we have to digitize everything because of what's coming. Well, the digital economy is to replace the fiat economy. So that's another sign they know what's coming, and it's pretty close.
In the past, when a world reserve currency had failed, there was another country that replaced it. If I remember the chain of events, it was Spain, then Britain, then us. This is a completely different scenario. Some people think that the BRICS nations is going to take over as world reserve currency, or just China itself. And some people think that gold will be the replacement currency. What's your take on it?
If you look at Basel III and you look at the central banks, they're going to use gold, but they're not going to circulate among the people. The central banks and governments of the world don't want to give gold to the people, because if you give gold to the people as money, then you can't run the dollar system and you can't do all the wars and all of the entitlement programs that get people elected. The political system wants an ever expanding money supply to not only buy votes, but to pacify people from complaining about when stuff doesn't go right. It's the bread and circuses sort of approach that you had back in ancient Rome. You give a lot of spectacle, sports, entertainment, that type of thing. You distract people over here, and then you give them free bread, but in the whole time you're basically destroying the economic system. And, gold will be used in revaluation. This time they're going to put a digital currency on top and force you to use a digital currency. And I know this because it's what they say. I'm just going by what they say. I'm not making it up. It's not conspiracy. Just go watch what world leaders say. Trump, his son, Basant, and others involved in the Trump administration have in the last 6 months come out and directly said, we need to replace our existing system. We need to go digital. We need to go blockchain. Trump's son basically said he'd be shocked if we weren't living in an all digital economy, and as soon as possible. And that was out on Twitter, that interview. I think it was maybe Fox News. The world wants to go digital. They want to use gold to back their system, but they don't want you to have it because they don't want an honest money system because it takes away their ability to create power and to create influence and control. And the people that get into politics want influence and control. They all think they have the answer, but they got to steal from us to grow and perpetuate that system. And eventually all those systems fail. They all fail. So gold will be at the center of that. I don't know if they would outlaw ownership in the US again. Some people worry about that. I would say it wouldn't really matter, even if they outlawed it. Not telling anybody to do anything illegal, but if you've got to buy food and medicine, you got to do what you got to do. And if you're in a digital currency age and you can't afford it because the government's printing that hand over fist, then you got to do what you got to do. And gold and silver is the only way out of that, I think, for the average everyday person. It's just unfortunate most people don't know that.
That makes a lot of sense. I remember lots of them. Well, obviously, the Romans, but also French, when the French king Philip the Fourth went after the Knights Templar because he owed them money because of his wars. He got rid of the Knights Templar so that he could have not only not have to pay him back, but basically take over the coffers that he could get his hands on. So it's just always the same thing.
Yeah, and I didn't fully answer your question. I realized you were talking about like old dominant world currencies like the British pound, the Spanish. And, if you look at history, when currencies go full fiat, meaning when the governments have debased them so much that they have no basis in metal, it's not a commodity currency anymore. Throughout history, like the Romans would clip their coins and then they would put base metals in them. And then eventually there was no gold or silver in Roman coins. In fact, if you go to coin shows and you looked at old Roman collectibles, the older ages are more valuable because they're older, but also because they actually have metal content in them versus the ones that were like base metals, like copper and other things later in the life of the realm. So all those currencies get debased and they average about 50 years-ish after they get fully debased that people will still adopt and use them because they don't have an alternative. But usually at about that 40 to 50-ish year mark, things crash. And we're 55 years now since Nixon took us off the gold standard. So we're right at that period of time in which I would expect the dollar to suffer its eventual fate, to have its meltdown moment, if you will. And, 100% of fiat currencies in history have followed this. It started in 1159 with the first one by China. And they tried two in the span of 3 or 4 years and then didn't try it for a very long time after that because it didn't work. And then, of course, we had the greenbacks during the Civil War. We're on our third or fourth currency in the US. The dollar bill is not the first. We've crashed a whole bunch of currencies before that, the greenback being one, there were others. So none of these things last very long. Once the governments pull the gold backing, they last a few decades and then they come crashing down. And, we all want to think that we're special snowflakes here in the US, but, history doesn't care. History doesn't care what your flag looks like. History doesn't care the size of house you have. History is history. And there are natural economic laws that can only stretch so far and then the systems break. And it's always humans trying to get cute and going outside of natural law, economic law, and natural money and thinking they can engineer the system, and it fails every single time without fail. This world, it was funny. I was watching an old George Carlin episode some months ago. And he was saying if the earth, people worry about saving the earth. And he's like, I think the earth just laughs at us. Anytime the earth wants to get rid of us, it can get rid of us. It's got earthquakes, it's got hurricanes, it can swallow us whole. I think there's this arrogance with people thinking that they control everything in this world. And because the human race, we've read our own headlines. We think we're infallible, but we're not. And whenever this world is done with us, it's going to let us know. And then we're going to find out real quick the folly of man. And we control a lot less than we think we do. And case in point, we're in tornado season here in the Southwest. And every time a tornado comes up, I go to Max Velocity's channel on YouTube because he has the best coverage, better than the local guys. And he follows all the funnels. If you've got a funnel right on top of you, you realize real quick, nothing that you did up until this point is going to save you from that tornado. Unless you're living, you have an underground shelter, or you're living in a a concrete bunker with 4-inch thick walls, or probably 24-inch thick walls. So I think it's about 12 inches thick of reinforced to survive an F3 tornado. Well, we've had F5s in my neck of the woods. Unless you're underground, you're not surviving. So, it doesn't matter what we build. When the earth is done with us, the earth is done with us. And natural law always asserts itself. It doesn't matter what people do. And that's the biggest thing behind why gold and silver. Gold and silver comes out of the ground. It's natural money. It's naturally regulated by the earth. Man can't screw it up. Man has tried to put derivatives and stuff on top of it to control it. That stuff always fails. And it's going to fail this time. It will fail. Natural law will assert itself. And people that understand natural law and have gold and silver are going to come out ahead of those that don't. It's plain and simple. I can't make it any more simple than that. The biggest argument for gold and silver is that when man screws everything up, the world has given us something that always works. And we simply just have to have a little of it.
I agree. Before we go, can you let us all know what's going on in your YouTube channel, The Freedom Report, and also Citizens for Sound Money?
Yes, on the Freedom Report, I have a YouTube channel, an X channel, or Twitter, if you will, and a Substack. And you can find me on LinkedIn too. But those are the three main. And I try to write on Substack because I love writing. I don't get it there as often as I want, but I do put out good content there. There's a really excellent piece from about a month and a half ago over the Fed's options, which is basically none. But it's a really good article. I spent hours researching that one, putting it together. YouTube videos every week. Twitter posts every day. And for C4SM, Citizens for Sound Money, simply find their website, citizensforsoundmoney.org. And I'm involved in that. I'm involved in a trade association for the precious metals industry as well, called the SMTA, which is an offshoot of C4SM. And I'm executive director of that. So what we're doing there, I kind of moved from my role on the board of C4SM, where we did a lot of the lobbying legal stuff, into SMTA, which does some lobbying legal stuff, but does other things for the industry. So what we're trying to do right now is support all the coin dealers, the mints, the miners, the tool and die makers, the retailers, the wholesalers, smush all of those people into a big trade association so that we can help build that trade association. Because if we want people to adopt gold and silver, we have to have the ability to provide them high quality products, provide consumer protections and standards, and standardize out our industry. So this is in preparation for the potential return of a gold economy. It'd take years to do, but at least we're starting it. And we've got a lot of big name, for example, a lot of big name retail outlets in the United States that everybody would know if I quoted, that have come in as founding members. And once we finish up our founding member recruitment, we're going to start talking to everyone else in the industry. And it's the businesses in the industry, but it's for support of the consumers. We're keeping an eye on consumer protections and standards. We want to make sure that we're not just promoting the industry to get rich. We want the industry to do well, but we want it to serve the customers. And so that's another project I'm involved in. So anyway, that's a lot. I enjoy doing it.
I've often said, I think you're busier than God.
He's the only one busier than I can confidently say. He's got to look after 8 billion people. So
Understood. Because I always enjoy your content and your work, and
thank you.
getting a hold of you is not easy. That's because you're so darn busy.
Yeah.
But I want everyone here to realize that this man is very intelligent, very busy, working on a lot of different projects. And I hope he has a good staff, because I wouldn't be able to do it all by myself. So
Well, it's been an absolute pleasure. Hey, anytime you want me on, I know sometimes it's hard to get me booked, but I love coming on. We'll be happy to come on again. So just let me know if you want to do another one.
I would absolutely love that, especially when you guys are talking about legislation, the legislative process. I want to thank everyone for coming, and I want to thank Rob for coming. Thank you, Rob. I appreciate your time. I know it's very valuable. Thanks, everyone, for showing up. Tiger Stacker out.